afternoon, ladies and gentlemen. It's your friendly neighborhood PM back with a special midweek edition of your weekly market update. Now, we're not going to give you the same talking points that we do every week, the same top three, but we thought with everything going on in the markets this week, from the markets falling 5% on Monday, VIX spiking, and monetary policy decisions, we decided to give you a special midweek update. But I'm not alone this week. I actually have with me our Director of Investments, Will McGuff. So, Will, in your opinion, what's been kind of driving markets this week?
Thanks everybody for tuning in, and Clayton, thanks for letting me hop in on one of your updates. As everybody's well aware, there's some volatility happening right now in the markets. It actually all began over in Japan when the Bank of Japan raised their rates from 0 to 25 basis points, and it set off a global liquidity cascade. Now, why might this happen? Here in the States, the Federal Reserve has a 5.25 to 5.5 federal funds target. The rest of the world, over in Europe and Canada, have started reducing their short-term interest rates. And with the Fed looking at data that's a little bit weaker, we've seen earnings come down, wage growth come down, unemployment go up, and inflation starting to act very benign. Market participants think that the Fed is now being too stubborn, lowering rates. And I would actually agree with them, because they're long-term neutral rates anywhere from like 2 to 3%, and they're at 5. And if data's coming in kind of soft, it's problematic. So getting back to Japan, a 25 basis point increase essentially caused the cascade of events, because investors were borrowing over in Japan at 0%. When you borrow in Japan, you have to borrow in yen. They were converting it to other currencies to invest in other things to make a spread on it. And all of a sudden, when the yen gets a reaction to the rate, now they've got to sell their stocks around the world because their currency's down 10% when the yen got crashed, and that's how we saw this cascade. So that's what's happening in a big picture. I was curious if you had any thoughts on what's going on at a more micro level.
On a more micro, fundamental, individual name level, we like to talk about that a lot on our weekly earnings reports. Yep. You guys will probably see some more of that on Friday. Now, a large amount of what we're seeing so far in recent earnings reports is a little bit weaker guidance than we were previously expecting from mega cap tech names like Amazon, Microsoft, Google. A lot of them are issuing kind of weaker guidance going forward on their revenues and their profits as a byproduct of them spending more and more on building on AI infrastructure. So that's been pretty much the prevailing theme of the last year, 2 years, if not ever since kind of NVIDIA led the way, which, so to speak, right now, NVIDIA is kind of the name of the ball, if you will, and they have really been the catalyst for this entire AI boom that's been going on. Now, they're starting to get kind of caught in investors' crosshairs, as they have gotten a recent report saying that their Blackwell architecture, pretty much that enables all this AI infrastructure, is potentially going to be delayed until 2025. So that then, of course, has ripple effects to these so-called hyperscalers, the Microsofts, the Amazons, the Googles, that make use of this AI infrastructure. And that's why you're starting to see some lagging effects of their revenue and their profit margins going forward, as well as you have investors then looking on the other side of it and going, well, you're spending a lot of this money, where's our return for it? So you're starting to get a little bit of antsy anxiety from investors in the marketplace. So we'll probably go into more detail on that on Friday as they continue to report throughout the week. So with that said, that's a more fundamental level. Where are you looking at it from an asset allocation level?
Yeah. Sorry to steal your thunder from the weekly updates about stocks, but I would actually say what you just explained to me is why you need a financial plan. You described the wall of worry. Long term, I think we're bullish on AI and the economy. You don't want to bet against America. It's going to be higher, longer, but you're going to have these short-term pullbacks. As things get frothy, events cause volatility and fear, people emotionally react, market participants do as well, and they rush towards safety, which is bonds and cash. And that's normal. Ultimately, staying the long-term investment plan, you have to go through these short-term corrections and pullbacks, because it shows the value of compounding. If you were to emotionally react and move to cash, you wouldn't know when to get back in. So our financial planners here at PrimeCap do a great job of helping get you in a right asset allocation that's going to include things like high-tech growth stocks. It's going to have some international stocks and bonds. So that's the ultimate value of diversification that we're seeing right now. Our bond portion of our bond portfolios are up as equities are coming down. So with that, I'll maybe turn it to you for any closing thoughts you may have.
No, I think that's perfectly well said, Will. And guys, like we say every Friday, if you have additional questions, reach out to your financial advisor. And if you don't have one, try to contact us and we'll get you associated with one. But as always, stick to your plan, stay the course. And we just wanted to make sure we gave you a special midweek update because of all the volatility that's been going on. But look forward to Friday and we'll see you at the same time as always. Thanks again.
Thank y'all.